Hello, welcome to another episode of Money Ministry. I'm your host, Craig Mack. And today I want to talk to those of you who are just starting out with your investment journey and just give you a summary of the content that I've created in my playlist. Okay. What I've done is I have provided you with everything that you need to get started. Um, with your investment journey. For example, I did a segment on how to start your brokerage account. But prior to that, let me backtrack. What I did was I did a segment on how to identify disposable income that you already have. You don't have to come up with new money to put and start your investing. You already may already have some. You can do that by going through your account over the next 30 days and see where your money goes. Look at your account to see if you have some old subscriptions that you no longer use or need. And then what you're going to do is repurpose that money. You don't need a lot of money. You only need about 25 to 50 bucks to get started on your investment journey. And you can find that with subscriptions that you no longer need or serve a purpose for you and stop the leaks that are coming out of your monthly budget and repurpose it. And what you can do is you can open up a brokerage account. And I did a segment dedicated just on that, how to open up an investment account, what they call a brokerage account. And I walk you through those steps. And then also part of that is I show you uh, all the way to how to open it to making your first investment. I do a live investment purchase so that you can see it. And it's in video, so you can stop the video and look and see um, how I did it, and so that you can totally understand that whole process. Okay. And then I did a segment on how to set up your indicators for charting, how to look at the charts and set those up. I've done a segment on each uh, technical chart indicator. Okay, each one. I did it in a PowerPoint format so that you can have a visual as well as I summarize the slides on there to make it easy for you to consume the information and to understand it and put it in this video format so that you can look at it as many times as you want. Okay. And then what I did was I uh, gave you a couple of suggestions on what you can do to some investments that you might want to look at. I went over ETFs, exchange traded funds, gave you a couple of suggestions. Okay. I've shown you how the tech sector is probably the best sector for you to invest in because it has outperformed the S&P over the last 10 years. It's giving you a higher return. I also explained how the returns that you get from investing in the stock market are greater than what you'll receive in a regular savings account. Okay, I know there are a lot of, the old schoolers out there who tell you to put your money into a high yield savings account, but what they don't tell you is that those high yield savings accounts, they come with a higher um, minimum balance requirement that you must maintain at all times. I think it's like $2,500. Okay. Your brokerage account does not require that. There is no minimum balance to open up a brokerage account. Also, there is no initial fee. The account is absolutely free to open. You can go online. You don't have to walk into a Charles Schwab or Robinhood. You can do it all online. It's free. They ask you for minimum information, that you do have to provide your social security number. You also have to give them an account, like your checking account from which you can transfer funds out of. It also gives you the option of setting up automatic transfers into your brokerage account from whatever account that you are going to be pulling your funds from. I highly recommend that you do that, just like you do with your gym membership. It comes out automatically. You should do the same thing for your brokerage account. Why? Because if you try to do it manually, you more than likely are going to fail. You're going to want to skip at some point, and then you're going to, oh, I'll do it next month, and then next month never comes. So it's best to set it up as an automatic transfer so you won't even see it. It comes out, and then you'll check that account. Next thing you know, you got a couple $100 in there. But that's for you to invest. That's all you need to get started. And then what you do with that is that you do what's called dollar cost averaging. Each month, make a purchase. You can just pick one stock or one ETF and make a purchase and just keep buying it. I also showed you how to do a fundamental analysis. That is, you look through the balance sheet and what to look for in a stock to make a determine whether or not it's a good stock to invest in or not. I also suggested that you invest in companies that you pay to. I used Amazon as an example, or T-Mobile. These are companies that you pay monthly to, and it's a way for you to recoup some of the money that you pay to them on a monthly basis. So now you complete the loop. It's not just one-sided. It's not just you paying them and that's it. No, you can buy stock, you can pay them still, use their product, service. It's a good service because that's why you continue to pay them. But you can also invest in the stock of that company so that the growth for that stock, or if you're fortunate enough to pick one that pays a dividend, you can receive money back. And so you create a money loop. All of this is what is called a money management system. That is what you're building for yourself. Okay. You're trying to not go from paycheck to paycheck. You're trying to build wealth for yourself. And then to make it even better, I wrote this book, Get Good at Money, A Beginner's Guide to Investing. So with this book, I go into the mindset that you need to have. There's no jargon in there. I go over very simple investment concepts for you. And so what you do is you get the book, and then the videos that I've put together, the content that I put together on this money ministry segments, the content, all right, it supports what I have in the book for you. So you have the book, you have the content to go over, and I simplified things as best as I could so that with all of that, you have a complete package to start and build and construct your own money management system and your own investment portfolio. I've shown you how to do the research on the stocks. I've shown you how to uh, make an investment to buy your first stock. I even touched on how to, if you need to sell, which I don't necessarily recommend you do. And I want to make it clear here. If you decide to sell a stock, you have actually taken the loss. What do I mean by that? When the stock market goes down, okay, and your stock price goes down, it is not a loss. Technically, it is, but it's only on paper. If in the next day or the next couple of days, that stock price goes right back up and goes above and beyond what you purchased it at, and it's a gain, you haven't lost anything. Understand that. You haven't lost anything. And as you get more experienced in investing in the stock market, you'll come to realize that when the stock price goes down, that's actually an opportunity for you to buy more. If you've done your research and you know it's a solid company, but something happens beyond the company didn't have anything to do with it. It's just that a market reaction caused the price of the stock to go down, but the company is still a solid company and it still makes money. but it's like it's going on sale. It's like when you go to a clothing store and you got a sales rack. Your stock now is on the sales rack. So you can buy more of it. And then when the stock recovers, you'll make that much more money because now you bought it at a really low price, say $20, and now it went up to $30, $40. Well, you've made, 20 bucks for each share that you bought. Okay? Your savings account is not going to pay you like that. A regular savings account is not going to pay you like that. A high yield savings account is not going to pay you like that. Okay. So the idea is for you to accumulate assets. That is what a stock is. A stock is an asset. We are in a K-shaped economy. What does that mean? I'll go through it again. K-shaped economy. Think of the letter K. You got two arms on it. One is going upward, the other leg is going downward. Okay. The leg that's going downward, that is people who do not accumulate assets. They go paycheck to paycheck. They're strictly a consumer. They don't save like they should. They don't save for their retirement. And so, as this economy continues to go, um, they're going to lose money and they're going to stay in poverty. I'll just put it like that. Now, the upward K, those are people who have accumulated assets. Assets are things that accumulate in value as you continue to hold them. Think of it like a piece of art, a Picasso or Van Gogh piece of art, even. Doesn't necessarily have to be a stock, but it accumulates in value. Okay. And that's what stocks are. They're assets. They accumulate in value. Yes, they go up and down, but over the history of the stock market has always gone upward at the end of the day. You look over the long term of the market, you look at the history, it has always gone up. It will go up in a stair step way, but it will go up. So, what we're going through right now, and I'm taping this as of June 28th, what we're going through right now is just an adjustment period. That's all. As the dust settles on the war and political and we're coming closer and closer to the midterms, and people are investors are trying to figure out which is the best way to go. You're going to have that choppiness in the market. That's normal. That is not nothing that's unusual. That is the time that we're in right now. But that's okay. But I can just about guarantee you at the end of the day, the market is going to go up. It's going to recover and it's going to go back up. This is the time actually that if you find good stocks, this is the time that if you got cash, that you put money to work in them. Okay. You put money to work and you continue to, on a monthly basis, which is called dollar cost averaging, you put money to work and continue to buy. And at the end of the day, you will do much better than putting your money into a regular savings account. So before I go any further, let me just say this so that the lawyers will be happy. I am not a financial advisor. I am sharing this information with you for educational purposes only. You are to do your own research. That is why when I did my segments, I never showed you my portfolio because that's not the idea or the intent of the content that I've created for you. I showed you how to fish. Rather than give you the fish, I showed you how to fish. So the next step is yours. I've given you everything that you need to set up your money management system. And also, I've created this content, as I've mentioned before in the previous segments. I've also done this for my future generations, my future grandchildren, so that they can hear directly from me how to build wealth and learn how to invest in the stock market and execute on it. Okay. So there you have it, folks. The next step is yours. I've given you everything that you need. There's nothing more that I can give you. I will still continue to create content from time to time, but what I had set out to do, the mission that I had set out to do, I've done it. I've provided everything you need to start your investment journey the right way. And like I said before, I don't charge. All of this is free. This is like a course that people generally pay thousands of dollars for. You'll have other content creators out here who will charge you for a special class or one-on-one with them and all of that and pay you, have you pay on a monthly basis or to pay a lump sum for their time. I'm not doing that. I don't believe in that. I think that people who are just starting out and hurting right now because of the political policies that have been put in place, I don't believe in adding another bill to you. I'm trying to show you a way out and how to better things, how to better yourself for not only yourself, but for your family. Again, I highly encourage you to go get this book. Okay? Go get this book. It's $22.95. It'll pay for itself. If you read what's in here, it'll pay for itself. If you read what's in here and follow the content that I've created, you'll walk away with a profit. You'll earn the bag. Okay. That is how this is set up to do. So, with that, thanks for those of you who have supported me and already have the book. I want to say thank you. Um, I really appreciate that. Um, and hopefully, uh, you guys can get started because the next step is yours. It's not mine, it's yours. So hopefully, you'll do that. If not for yourself, do it for your family. All right. All right. See you on the next one. God bless. Take care.